I hope you guys doing well and welcome to today's edition of the London Session Open, the daily market update by ATFX. My name is Alejandro Zambrano and I'm the Global Chief Market Strategist and I'm based in the London office of ATFX. We're going to take a look at the markets, see what's going on, and I also want to thank you all for joining me this morning and also everybody that's watching the recording. Vincenzo says good morning. I say good morning to you, sir. Thanks so much for joining me for yet another session of the daily market update. That's it, guys. If you have questions, by the way, just put them in the chat box and we'll address them as soon as we finish with my presentation. Let's spend a few seconds on the risk disclaimer before we move along. Okay, so let's begin with the euro. And euro's up today with about 29 pip, which is not too much. It's still quite a bit, and it's moving towards the March 6th high. I really hope we don't go above that. And I'm just saying that like a trader and a trend following trader. Obviously, if you're a range bound trader, you're probably very happy right now. But when we had the break here to the 2018 low following the last week's ECB rate meeting, I was hoping for further move to the downside. As you can see now, the market wants to revert back into this range, which, if you're using a range bound sort of trading strategy, I guess that works well. But if you're following a trend like I am, it's not really what we want to see. Anyway, the market is heading upwards, and if we took out 113.26, I think we're just going to go up here and literally just going to be stuck back within the range. Nothing to do really, rather than just ignoring the pair, because within these levels, it's really difficult to say if we should be up or down. The only thing we know that the prices are oscillating. As for taking on a new position, if you're trying to follow like I am, like I communicated yesterday, the preference is to break to 111.75. Take that out, and hopefully we'll leave this behind, and then we can probably trade lower. But right now, we're going in the opposite direction. GBP versus the USD. So difficult market, and yesterday we got some sort of updates that we might potentially see some breakthrough. Apparently, the EU has agreed to some of the requirements that the UK had. So the UK is not going to be stuck in limbo with the EU forever, because if they don't agree, the backstop is going to kick in, and out of that backstop situation, there was no real way out, and the EU could technically sort of keep the UK forever in that position. So Brexiteers and even non-Brexiteers wanted to see like a legal agreement that sort of allows the UK to exit. And they opened up for some sort of mechanism, but I'm not an expert on this, and there's not too much content available online. But we do know that the market traded upwards. Now, around 8 p.m. today, we're going to have a vote on the new sections and the sort of the new deal by Theresa May. And if that deal goes through, then obviously, most likely, we'll be trading at 135, maybe 140 eventually. But it's unlikely that that's going to go through, I suspect. So we're still going to be around here. It's just going to be very, very choppy. Now, I'm not the guy you want to ask and consult for these sort of events, but I can tell you this. I've been trading since 2006, and we don't have to trade today, tomorrow, or on Thursday, as we have all these different votes, because it's going to be really, really difficult. And yeah, I don't really see any good opportunities trading spot the way we're doing here. Maybe if you want to, you could trade options and things like that, but if you know what that's all about, then yeah, I guess I mean, you already know what to do, really. If you don't know, then you can explore it, but it's not that easy. There's no free tickets to trade options. So try that as well. No free lunch. That's what I want to say. This is the dollar versus the Japanese yen. I was wrong about stock markets. Stock markets have rallied significantly, and the dollar yen is sort of lagging behind that. And I think as long as it's about 110.30, 131 that the market is probably going to head upwards towards 112. Here's the S&P. The S&P, as you can see, rallied strongly. To my surprise, took out that trend defining level for the bearish side. So now I'm neutral this market. I still think it makes sense for the market to go down here a bit more. It'll probably go lower, but I don't want to short this right now. It killed that short-term downtrend when we traded all this up here. I'm very neutral. I think we could go upwards, we could go down, but clearly the dollar yen has not catched up with this move. So maybe the dollar yen should be trading somewhere up here or 112. Give me just one little second here. Okay, I'm back. Sorry for that. I don't know if you can hear it, but I'm having a bit of a cold, so I just had to sneeze. Okay, so that going upwards, and the German 30. Let's talk about that one. So it's quite interesting, with um, U.S. stock markets now moving upwards. The German DAX bullish view actually bottomed out and not bottomed out, but bounced, and the integrity of the uptrend remained intact. We're now retesting sort of what we saw yesterday, and as long as straight above 11,392, we can probably head upwards here. We're still working with a head and shoulders. It's going in the right direction. The first head and shoulders we identified was this one here, and now we have this big one here. So it's going in the right direction. It's just that it's taking its sweet time. Maybe we'll reach that target. If we continue in this pace, we might reach the target maybe by May. So still some quite good amount of time to go. Bullish though, that this makes perfect sense. Crude oil prices, they're bullish as well. They tend to trade alongside stock markets and risk appetite. Apparently, OPEC, as you can read down here, deepened supply cuts. I'm not sure. Obviously, a positive headline. It doesn't really matter. Like macro fundamental news in regards to crude oil is the track record there is really poor. So I don't really care too much about that. Dealing with that uptrend, take out 57.89 and we can have a resumption of that move. Here are gold prices, which moved up a bit, but not enough to hit that sell zone. It seems that there's not a huge interest to sell or to buy. It makes me a bit neutral. I prefer break 12.76. Break here can take you down lower. That will be in line with this downtrend. Will also be in line with overall sort of stronger dollar, good economic data, increased risk appetite. So that's one solution, one setup. The alternative, maybe up here, people might try to sell. And I think that's pretty much it. I think we covered all the markets that we should cover here in the morning update. So if you guys have any questions, you can put them in the chat. You can also, of course, put them in the question. In the chat, you should receive a little message now. You have my email there as well if you have any questions. Okay, so let's talk about something a bit different. I put a tweet on my Twitter this morning at AlexFX00. Did a little video. You probably want to check that out. This is my Twitter at AlexFX00. Now, what is interesting is that the markets right now are very, very, very quiet. Okay, they're usually not this quiet. Okay, and yesterday I wrote this article, published that on the ATFX homepage, which is called "The Disappearance of Price Momentum." Now, I talk about trends and how trends come and go, and also talk about the fact that right now it's a bit quiet and we need to take care with our risks and sort of just keep our powder dry, sort of wait for the next move. And then I received a comment on this, and the comment was, Alejandro, hoping this period won't last much longer. And you know what? I am also hoping for the same. But we shouldn't. But something that this comment actually brought me to explore is that what are the alternatives? So what if sort of sideways and choppy market don't come back anytime soon? What if they continue for like 6 months, another year? Is that bad? Are we losing out? Because that's really what's interesting. And I did some comparison here. And if you put your money in the UK or in the Eurozone, you're going to get about 0% return, maybe 0.25, so 25 basis points at most, if you have like special savings accounts with your bank. Okay. So that's not really feasible, right? 0%. Now, there's alternatives. We can invest in something like the S&P 500. On average, the S&P 500 is going to gain about, or has gained over the last 28 years by 9.6% annually. This is the S&P with dividends reinvested. Okay, if you would do the same and put it in something like the FTSE 100, I think the return for the FTSE 100 is about 4.5%, maybe 5%. So those are sort of the feasible alternatives, I would say, to not betraying yourself, right? Now, not maybe so many of you guys know, but since 2014, in my own sort of trading accounts that I had with spread betting brokers here in the UK, I have returned about 288% return. Over the same period, if someone would have invested in the S&P 500, they would have a return of 55%. Of course, investing in the S&P 500, just buying a little bit every month, it's far more easier to try to trade the way we trade, with stop loss and entries and leverage and whatnot. But the rewards, though, and the risks, but the rewards in particular, I think, are far greater than trading the S&P 500. Of course, the S&P 500, you're not going to get a margin call on that if you're trading unleveraged. You're not going to get that. But you're definitely going to have like that big decline we saw last year, like 15, 20%, and the sort of other declines we had since 2014. You're definitely going to have that, but you're not going to get a margin call. So the risks are definitely higher in what we're doing here. But as a comparison, again, I'm up with 280. By the end of last year, I was up with 288% on my trading account, whereas the S&P was up with 55%. Now, for that person to catch up with me, and they get the average return of the last 28 years, which is 9.6%. So for them to catch up, if I done my mathematics or my maths correct here, it's going to take them 10 years. That's true. 10 years for them to catch up with me. And my average return over this period, I think, is about 31% or so, which is more than 3 times the average return here. So let's sink that in. If I don't do nothing, if the markets are trading sideways for the next 10 years, and I produce 0 returns over 10 years, at that point, someone just holding the S&P 500 is going to catch up with me. But is it realistic that we're going to have no trends for the next 10 years? Is it realistic that we're not going to have any trends for the next 5 years? No, like none of this is correct. Is it realistic that maybe for the next 6 months, maybe worst case 12 months, we might have no trends, no nothing? Yeah, maybe that could happen. But if you look at something like the euro, it already has been trading sideways for since I think May last year. Since sort of the last really good opportunities and easy opportunities was in the beginning of the year. Say this is April, euro dollar was at 124, and then the market declined to something like 115. 115. And then since May last year has been very, very sluggish. Look at the S&P 500. Since pretty much a year now, we're stuck in this big, massive range. Look at something like copper. I mean, copper has been stuck here since July, but now starting to move upward. So, key point here is that, you might have more sideways markets in the euro, but another year of sideways price action could be, but I don't think so. Another year more, or maybe sideways action in the S&P? Maybe, but I don't think so. Is it going to be another year of trending sideways in crypto space with Bitcoin? Maybe, but I don't think so. So if we look around, look at all the different asset classes available, there's always going to be some sort of a trend. And then again, if there's nothing over the next 10 years, we're still going to be same well off as the people just holding the S&P 500. And this is why I trade the markets, because they do provide these opportunity to get on board some crazy trends and make some serious money. For example, in 2017, because of the crypto boom, I made about 127% return that year. Last year, it was a lot about stock markets, and I made about 39-40% return. And this year, I'm down with 3%. So, look at it from that perspective. And then when suddenly, again, if nothing happens in the short term, who cares? Okay, I don't think we have any questions. I think we're going to wrap things up. Guys, if you have any questions, and if you want to have one-on-one coaching with me, then check out the ATFX website. As you know, if you open up what we call an Edge account with ATFX, then you get access to 2 30-minute sessions with me. You just need to request them. If you go via me as well, it's obviously easier because I'll keep track of things. Why do you want to trade with ATFX? Who are ATFX to begin with? ATFX is a company based in the UK, FCA regulation, but actually we have a big office in the UK, but we have even a bigger office in Hong Kong. They're very strong in the Far East, and they open up offices here in London. Now, what's good with them is that you have the FCA protection. You have a lot of people here that worked in brokers in London before, so nobody here is a rookie. But the great advantage for you is this retail edge account. So with the retail edge account, you're gonna get tight spreads, not only on your majors, not only gonna you get a 0.6, 0.7 on GBPUSD, but you're gonna get tight spreads across all the exotic pairs as well, like Aussie dollar, New Zealand dollar, 1.3. Check that out with your broker right now, what you're getting on Aussie dollar versus New Zealand dollar, and compare it here. So you have all of this plus more pairs, metals, oil, stock market indices, cryptocurrencies, and shares. They're quite responsive as well. I like that. I work with other brokers, and we're asking about cryptocurrencies, and it took like 9 months, a year before we got the cryptocurrencies. And then by the time the cryptocurrencies were sort of in the system, the boom was already over. So they're very receptive, they're very, very quick. So check it out. Very, very good pricing, and you get that coaching sessions for free with me. Okay, gonna wrap things up. Guys, thanks so much for watching, and I'll see you guys tomorrow, same time here at 9:30 a.m. London time at ATFX for the London session open. Thank you.